share price actually moves only because of two reasons. Like one, I said the institutions like mutual funds, pension funds, or a big strategical investor, when they come and buy a share, okay, and they accumulate it over a period of time, that is when the share price goes up. Okay, that is like a genuine reason. And remember, the mutual funds, when they buy the share, they are not like you and me that go and buy at whatever rate they like. They will usually use a feature called limit order, where they will tell the broker to buy the share with a particular price range. Now that, most of us, we call it as VWAP. Okay, so during the technical analysis session, I'll be talking about VWAP. So usually you have to closely watch at what level these institutions are accumulating the share price. Second reason why the share price can go up, that is when the brokers and the cartel, like what Adani Group can do or may do, is they will set up an office in Mauritius or Cayman Island, what we call it as a tax-free zone. Like sitting in India, you can open a company there with complete anonymity. Like being anonymous, you can open an account there. Like you don't have to disclose all your details there. They give you that freedom. Once you create a company in Cayman Island or a Mauritius, this investment company will start buying the shares of a target company. Okay, I'll repeat it. Like for example, Adani will create a company in Mauritius. Now this company will start buying Adani Power shares in the through the Mauritius branch, through NSE BSE. We call them as FIIs, foreign institutional investors. I'm not telling all foreign institutional investors are fraud, but there is a high scope of using these offshore locations to buy the shares of the company, what we call pump and dump. When I say pump, if I start buying the shares of a company like 111, 114, 115, the supply in the market will reduce. Okay, and then when the supply of the market reduces, then artificially the price will go up. That time the retail investors who saw the share price at 80 rupees, 90 rupees, and when they see the share price at 200, 250, they will start coming and buying the shares. That time this Mauritius office can start dumping the shares at 200, 300 rupees. We call it as pump and dump. So many people do this mistake. Whenever they see foreign institutional investors or some fancy brokers buying the share, they go and buy that. If you do that, there is a possibility that 8 of the 10 times you lose money, 1 or 2 times you may make money, but that 8 or 10 times of the money will completely wipe out all your profits. Have you all picked up any stock where the prices till you bought kept on going up, after you bought it started going down? Has it happened?
Yeah, sometimes, yeah.
So you were the victim of pump and dump. Okay, like for example, they will create a rosy picture about a loss-making company, telling that company will sign a contract and all that, and some FIIs will buy. People think all FIIs means Goldman Sachs, JPMC, and all that. So best is you look at what institutions are buying. So how do I track? For example, these are the stocks which were picked up by the mutual funds in the month of November. Okay, this data you get it by around 13th of every month. Like right now I am interested looking at Archelin Chemical Industries, Sun Pharmaceuticals, then ONGC, and then Tata Steel. These kind of companies I am willing to pick up. But then you may say, why are you not looking at BKG Foods? Why are you not looking at Shriram Finance Limited? Any idea why we are not looking into those companies? Go ahead. Any thought why we should not look at buying a stock like BKG Food International just because the mutual funds institutions are buying.
Is it
Because
because it's a
then,
small cap?
yeah, one, it is a kind of a small cap. Probably, let's say you have around 10 lakh rupees with you. Now, if you put all your money
Risk
into
is
this
also higher.
BKG Food International, if you put all your money into this BKG Food International, and when you want to sell the stock in the market, the problem would be that there may be no buyers in the market at that point of time. We call it as liquidity issue. And with regard to Shriram Finance Limited, the management of the company is not that clean. Let's be honest on that. Okay, so you need to filter out the company where the managements are not clean, where when you sell the liquidity issue may be there, and then you need to pick up those kind of a companies which have got a high liquidity and where the management is comparatively efficient. So that in the 6-7 hour fundamental analysis, I will show you how do you filter out good management and bad management. See, if I know a good management like a well-established name like HDFC, Tata Steel, it's fine. And if I don't know about the management of BKG Food International and all, I don't pick it up. It's not like the management may be bad, but I don't have the relevant information. But usually what I do, I speak to the industry circle. Like I have a couple of friends who work in the broking primary market division. So we interact with them. We ask them like, how is the management? Do they pay time salary on time to the employees? What is the how do they pay the payment to vendors on time? That information, say you can figure out if the management is clean or not. If the management is not clean, you don't touch the stock. Yes. Okay, so these are the companies which we will be looking from the investing and the trading point. Sun Pharmaceuticals, then you have this HDFC Bank, Tata Steel, and then Bharati Airtel. Again, Bharati Airtel has an issue. That is, the industry is going through a major transformation. Like they're shifting, focusing on 5G, where the capex and the revenues may not be a very what do you call positive for the company. So when you have such kind of uncertainty, you basically don't touch that company and focus on the other players in the market. Okay, now for example, Delivery Limited will not pick it up because I think it's a loss-making company and there is certain issues with the management. Now some of you, like I think Sridhar and Narendra, you have to take a call whether you want to be a trader or an investor. There's a difference between trading and investing. Okay, let us look into the major difference. Okay, first let me understand what. First of all, I would like to thank you that you have chosen a return on investment at 35%. If you had chosen the return on investment on the poll which we conducted in the group as 100%, then I would have told probably this course will not help you, because trying to generate 100% returns per annum is very unrealistic, and the chances of you losing your complete capital will be very high. Like I can take 1 lakh, put it into a stock and wait for it to become 10 lakh, or it can become zero, like what we call, it's like a pure betting kind of a strategy. I will put 1 lakh, if it becomes zero I'm okay with it, if it becomes 10 lakh I'll be more happy. Now that kind of a bet you need to take if you want to get 100% return. But 25 to 30% it is achievable, either of the approaches that you take, whether you want to be a trader or an investor. So Narendra, what do you understand from trading?
I
You would have seen your friend ka screenshot, someone in Twitter, and what and all did you assume from that? Go ahead.
well, trading actually, I have I work in ICICI Bank, so my portfolio is basically handle capital market different clients. So I have a lot of clients who deals with trading. So they buy the trades or get into equity, get the stock at the right time, and see the company's technical analysis, how the market is going, and how to invest and what to invest. I feel like the technique is what I feel like trading is a part of.
Okay, Sridhar, what's your view on investing and trading?
Yeah, I don't have much idea about it. I just saw some videos in the YouTube. It is bit of confusing stage. One person will tell one another other. It's completely different meanings what they give. So as of now,
Okay.
I don't have much idea. Yes.
Okay, Shanti?
Yeah, trading is all about we should forget when you just invest. Mostly we are just we are taking the right fit. For me, I've already burnt hand by just doing, by initial trading, especially on Sun Pharma, Ayappa, which you just uh, told
Mm,
me. I
mm,
just bought the stock when it was on peak buy. I just saw it was on 600. Then
mm,
it was 650. I did little bit of 20% of profit of there. And
mm,
again, it went to the 900. Then they
mm,
gave the dividends
mm.
and they put in the tender. So when they just put in the tender, then again we got some profit. Okay, the bidding had happened, and the zoop it went and it went. I mean, almost like 300 it has come. So not even 300, it come to 270.
Which one?
And
Sun Pharma?
Sun Pharma, where it is
No, no,
happening.
no. Sun Pharma is at 900, na? 1200 it had gone.
No. Sun Pharma, it has happened in 2000, maybe in 2019.
Ah, during that time. Okay.
Jet Airways also is the same. I mean, see, I lost my mind. My friends were suggesting me to just invest in Jet Airways. The day I bought, very next day I see fully downfall and it has come to, two digit, 900 rupees, 700 rupees stock. It has come to two digit. I don't even remember. Then completely got almost like 1 lakh. So then I thought, so this is my experience in the trading. So
So what you did, Sun Pharma probably the risk management part was not there. Okay, let's even look into that case. But Jet Airways, it was a pure price manipulation. And when the management is very close to some political party and when their name is involved in some bribing scam, you should basically avoid it. Like
yeah.
if the management is not clean, don't touch it at all.
No,
Okay.
later I learned the lesson, but this is what my experience on the trading.
Yeah, so experience is something that after you experience it, you learn from it. It cannot be explained.
Yeah.
Okay, but friends, let me tell you the difference between investing and trading. Okay, so first of all, when you say investment, you need to filter out companies because there are 2,500 listed companies in NSE. You can't put all your money into the 2,500 and it doesn't make any sense because out of the 2,500, if you download the share prices in an Excel sheet and after 5 years, if you go and check, most of them out of 2,500, I can bet 1,500 stocks will have the share price like will be trading at 10% of their face value, 10% of the today's value. Only 1,000 stocks will survive, 1,500 stocks will get wiped out. Historically, this has been the data. Like when I entered the stock market, there was a company called Asian Electricals. It was trading at 600. From 200, it went to 600. And now the value became zero. Then I saw Jet Airways coming out with IPO. That value has become zero. Then came SpiceJet. Now that is also in deep trouble. Then, so there are a lot of businesses which take a big hit and become like a zero value or lose their value. When I joined the market, Yes Bank had come with IPO, 57 rupees. From there, it went to 1,200. And now it has come down to what, around 17 rupees. So the market may 1,500 stocks will get wiped out in a period of 5 years. But then new 1,500 companies will get added to the list. So it becomes very important you filter out the bad stocks, pick up the good stocks. So to filtering, we use fundamental analysis. And since most of you are beginners in the market, focus on cash market. Like an investor, it is always advisable takes a long position in cash market instead of using futures and futures and options. Then most of the investors are not aware about a technique called pyramiding. Okay, pyramiding is a very powerful tool. Like I'll show you this. Like all of you had expectation of what, around 20 to 35% return, right? So here is a recent example of Tata Power, which I had traded in my account. So here you can see the total trade from 85 to 117. Now that includes buy sell at different prices. So this is the overall value. Now what is pyramiding? Pyramiding is something like this. You buy a small quantity at the current value. Like I had done the analysis of Tata Power. Okay, and I knew most of this government incentives will be towards this clean energy, and Tata Power is one of the player there. So what I had done is, I said, okay, let me pick up some stocks here at 102 level. Okay, look at the date, May 2021, May 2021. So even in the WhatsApp group and also I'd posted, like that time all the technical analysts said, no, it doesn't have a strong potential and all that they were pointing out, but I just ignored him. I bought a small quantity there. Then when the price went to 124, I added more quantity. This is called pyramiding. You buy a small quantity at the current price, buy a bigger quantity when the price moves up in your direction. The same thing can also be done if the share price is going down. I'll show you that Excel calculation, like how it will help you when it moves downside. So it's about deciding how much money you want to put into market. Let's say at this point of time I had 10 lakh, but I did not go and put all my 10 lakh into this Tata Power and pray that let it go up. What I did, a small part of 10 lakh, that is 1 lakh, I wanted to play with Tata Power. So what I did, initially I deployed 10,000, and when the price went to 126, I deployed another 20,000. Like this, you keep adding the stocks to your portfolio, so that if the price had gone to 80, I would have invested another 20,000 in Tata Power. So you keep some money with you so that when the price comes to the lower level, you add it. Does it make sense? Like, are you all able to follow me? Like,
so it means that we can average the price when it comes.
No, there's a difference between averaging. Like for example, you have 80 rupees here, Tata Power.
Okay.
And you had your share price when you entered the market 100.
Okay.
Now in pyramiding, what we do, at 100 we only deploy, let's say 10k. We deploy 20k when the price is 80. If the price goes to 60, you deploy 40k.
Okay.
In case if the price comes below 55, you exit. Now why at 55 you will book loss and come out? Because that is weekly support. We use something called as a Ichimoku trading system, which clearly tells you what is the weekly support. If the price comes below 55, you need to accept the defeat and come out, but your losses will be less since you deployed majority of your funds when the price was around 60, not when the price was 100.
Okay. Okay.
Okay, so if you have already filtered out good company stocks, you're seeing mutual funds are participating in that, there is only 10 or a 15% chances that it will go below the weekly support level.
Okay.
Like for example, when Shanti ma'am had picked up Sun Pharma at 900 or something, and if she had seen the weekly support there at that point of time, probably it would have been somewhere around 600 or 650. She should have exited everything there and said that let it again go back higher level, I will rejoin, but let me protect my capital.
How will we know the point that you have to exit at that point of time?
That's what you want to learn in 42, 40 years.
Uh, okay.
See, market, if it is just buying and holding, na, I mean, you can buy and hold, that is mutual fund, where your job will be done by someone else. Okay, like you buy mutual fund, they will keep accumulating good stock. When the price goes up, they sell it.
Yeah, as a fund manager to it, yeah.
But the problem is he will not be that aggressive as you and I am, because he will have his own restriction. He will get his fixed salary. He wants that annual maintenance charges. Like if I'm a mutual fund manager, even if I don't make money for you, I still get my 2.5% commission.
Okay.
In mutual fund, what they do, when they take 100 rupees from you, they say there is a management fee, okay, of 2.5%, which they will deduct from your account on a yearly basis, like on an average daily basis, they calculate and they deduct it on a yearly basis. So even if the fund goes down, the fund manager will still get his management fee. So that's the reason they are not very aggressive, for that reason that they need to protect their own interest also. So that's why you need to have both. I would say have both mutual fund as well as your own trading account. Whichever works for you, you focus more on that. So using Ichimoku weekly support levels, you need to exit if the trade goes against you. Okay, now, so what do we do in pyramiding? In pyramiding, you buy at different levels, but you change the quantity accordingly, so that way it will help you to reduce your losses. So here in 2021, starting from May to August, I think till September, I had accumulated the shares. And when the price started going up at 234, I started liquidating it. And that money, I moved it into some other stocks like Hindustan Unilever and other stocks. I moved that money. So this is the beauty of investing. This I don't call trading. I call it as investing. Then you say investment means you should stay invested for 5 years, 10 years. That is for those who do not want to actively participate in the markets. Since you are actively participating in the market, time also matters. So from August to November, though it was investment, the profit came, you exited. In 5 years, probably Tata Power may go to 300 or 400. But the same 234 rupees I would have invested in Hindustan Unilever and made it into 500 or 600 in next 1.5 years. So you keep rotating the capital here. This is what we do in active investments.
Okay. We don't have to take the entire share profit, right? So we can take our respect. It's our call, right?
Correct. For example, if you buy 1000 Tata Power, sell 800, 200, you leave it like that.
Okay.
In case if it again comes to 121, go back, check the fundamentals, why it is coming to 121. And if it has got a potential, rejoin the stock.
Okay.
See, end of the day, you need to figure it out for what reason the price is going up or down. For example, there is a company called CDSL. Okay, how much ever this Zerodha, then Grow, Upstock, these companies grow, CDS will automatically grow along with it. Because every time when you sell a share, they charge you around 15 rupees as DP charges. In that, they get around 6 to 8 rupees as a profit. So more the account gets opened with these brokers, more will be the revenue of the CDSL. So CDSL, if it comes to 1100, 900 is a good accumulation. Now, do we put all the money into CDSL? No. Why? For a simple reason, if there is a major hacking that happens on the CDSL server, then the CDSL's share price can go to zero. So what we do, we just put 10% of our money into stock like CDSL, which has a potential to go to 3,000 rupees from the current 1,000 rupees share price, or it can even become zero if there is a major hacking that happens on their platform. So here what we do, CDSL, we buy at 800, sell it at 1,400, some part of it. Again, when it comes to 900 or 1,000, add it. You keep doing that also. I'll show you that illustrations a bit later. Now recently, look at L&T. 1828, I had bought this L&T stock and I sold it at 2051. You have the dates here. August May we accumulated it, and in December I sold it. I got around 12% returns in a period of 3.5-4 months. I got it, right? This is what, August, December, August, September, October, November, December. Yeah, November, almost around 4.5 months mein we made around 12% return. So 25% return per annum is achievable if you accumulate in cash market after you filter the stock and you apply trend analysis. It is a combination of three things. Investment mein, first you filter the stock, accumulate it using the pyramiding technique, then have some patience. It won't go up in 1 week or a 2 week. It may require 4 months, 8 months, or a 10-month time period. Have that patience. Don't put all your money into one stock. Just deploy 10 to 15%. And then basically use the trend analysis to play around it. Navika, are you able to follow me? Okay. Nagendar, are you able to follow me?
Yeah.
Okay. Now what we do, after you buy a stock, to generate some extra returns, we deploy something called as a covered call strategy. So here you can see I had accumulated Hindustan Unilever at 2,338. I have still not sold it. Like I told you, I'm looking at target price of 3,000 rupees for this stock. My price is 2,338. My target is 3,000. Current price is 2,671. Currently I'm in a profit of 99,801. But what has actually happened is, after I accumulated the stock, I got 4,000 rupees as a dividend. The Hindustan Unilever recently paid 19 rupees as a dividend. So 19 rupees into 14 rupees, I believe they paid as a dividend. Into 3,000, it comes around 300. It comes around 4,500. So that was one advantage of getting dividend. Second thing you can see here, what I do, I sell this call option. I'm selling 2,800 ka call option for the last 3 months, October, November, January. Now, if Hindustan Unilever doesn't go more than 2,800, no problem for me, because I would have already made around how much? Around 24,000 I made here as a call option premium which I collected. We call it as call writing. Well, are you able to get the point here? Like now you may have a question, what is call writing? How do we do that? What about the margin? All that I will take you when I talk about this options and trading strategies. What I do, I have not given any cash margin. I have put the same stocks like Tata Investment Corp. I put it as a collateral. I get a margin benefit. Like when you want to sell a call option, you need to keep margin with the exchange. So you can either keep the cash margin or you can keep the stocks as a margin. So here what I did, Tata Investment Corp, I put it as a collateral. That's the reason it is not showing under my DP. It will be under the broker ka DP, because he has taken that as a collateral, and I have pocketed that premium to my account. So here what has happened currently, 99,000 is the profit from the share. 4,500 came in the form of dividend. 24,000 came in the form of what do you call option premium. So basically you made almost around 28k alternatively, and obviously your share price appreciation is there. Now the same thing I do it with Reliance also. Reliance, if you see, my average price is 2,300, but every month I've been selling the Reliance ka call option. You can see here 4,000, 5,000, 3,500, 15,000. Like this, I collect the premium here from Reliance. Yes? Questions? Shanti ma'am, any questions from your end?
Yes, sir. Actually, this challenges when we go with those long-term shares.
Hmm.
So I put on hold one of the stock because of I was feared to just sell with a huge loss again. Okay. But still that stock is not coming up. So what could be the reason, I would like to know. As though I went and did the fundamental analysis and technical, it shows, I mean, it is going to come, or maybe it may not come up. So in that way, I'm a bit confused several times with few stocks, not all.
Okay. Like, well, let's pick up the bad one and see how do we fix it.
Yeah, yeah.
Okay, which stock is that?
That is of, let's take this S Bank.
Now,
Yeah,
first of all, Yes Bank, you shouldn't even touch the Yes Bank stock
I didn't buy only.
because of the management was not clean. Rana Kapoor was not clean, and then a lot of issues were there with that particular company. So Yes Bank and all, see here, if you look at a weekly chart,
No, last week someone called and then they told it's going to be again, it's going to come because the management changed. A lot of things are happening,
now
but
for
still,
example, he called and told you, ask him if the price goes down, will you buy back from me?
no answer.
So someone telling, see your friends, assuming you were holding Yes Bank, okay, assuming you are holding Yes Bank, this is the weekly chart. As and when the price came below 283, you should not even listen to God, just sell it. You may say, sir, I bought the share at 400, how can I take 100 rupees ka loss? If the weekly support is not respected, that means something is totally wrong with the company. Like I told you, this mutual funds and all, pick up the stocks at the weekly support levels. So now what has happened here is the price then crashed. Then someone is accumulating this share. We don't know whether it is the mutual funds or whether it is the brokers. That needs to be investigated. Who is accumulating this Yes Bank shares? Whether it is institutions or whether it is the brokers. So what we need to do here is go to an app called Stock Edge.
So can we take PC Jewelers? That is one.
That management is not clean.
Oh,
I'll give you a shortcut. How do you figure out the management is clean or not?
okay.
Okay, go to this Yes Bank in Stock Edge app. Best part, no advertisement in this. Okay, look at the shareholding. Look at the shareholders here. Okay, State Bank of India, LIC, they are the strategic investor. The government of India wanted to bail this company. So they asked State Bank of India and LIC to pick up a stake. Okay, now these are all the banks are mainly holding the shares of this company. Now, when you don't have a driver for a aeroplane, when pilot for a aeroplane, and it is managed by a group of pilots, will you still board that aeroplane? Like there are two options in front of you. One, there is a qualified, experienced pilot who is in charge of that particular flight, and then there is another aeroplane where a group of pilots are managing it. Like whenever whoever is free that day, he will take it and fly it. Now, which one will you choose if you want to travel?
Always experienced one.
Because if you go with a group of pilot, one of the pilot may find a better job and he may quit that company and go away. That day it may not take off. Or a retired pilot who is not physically fit may be flying it. So there's always a risk in that. In the same way, if you look at the Yes Bank, these strategic investors are driving the business. They themselves have the banks. So do you think they'll focus much on Yes Bank? No. Until Yes Bank doesn't get someone like Aditya Puri as a managing director or a CEO, the growth of the bank could be limited. So you need to see whether Aditya Puri is going to come in as a key director or on the key role into that company. That time it may become a good role. And look at the public shareholding. Okay, see here, mutual funds are not buying the shares. Simple as that. Mutual funds are not accumulating this Yes Bank shares. Okay, that is the one of the thing. Okay, a second. Yeah, now coming to the point here. So what I did, I went to StockEdge app. I see whether the mutual funds are accumulating or not. In fact, mutual funds are reducing the stake in the bank. They are selling it. They are not buying it. Now, do you want to go against the mutual funds and still take a call on Yes Bank? That is your choice, but I wouldn't do it. Instead, I would look at a bank where mutual funds are increasing their stake. So let us look at HDFC Bank. Look at the shareholding. Look at the shareholders. Public shareholding. Okay, look at the DIS, mutual funds. 22%, 23%, 24%, 27%. Now, what are these percentage? Okay, so some of these are very, very basics, but it is very important. HDFC Bank has issued 557 crore shares. 557 crore shares they have issued. Who? HDFC Bank. In that 557 crore shares may say, okay, if you look at the shareholding patterns, mutual funds are holding 27%. That means nearly around 100 crore shares are held by mutual funds. Here they were having only around 90 crore shares, but now they have increased it to 100 plus crore shares. So that's the reason, instead of just someone says, I will buy, the price looks cheap, the price is going up, the chance of failure is very high. So when 557, right, 557 crore, so they had invested 22%, that was 122 crore. Now they have invested 27%, that will come around 150 crores. So mutual funds have added 27.85 crore additional shares into their account. So when I track that information, what I do, I go and add it to my account. So HDFC Bank, I have actually added it to my account at a price of 1300 level something. I think I have it here. One second, let me show you that. So here, if you see, I had added HDFC Bank to my account here at this price 1535, 1437, 1409, 1529, 1326. So like this, you keep accumulating that. Clear, friends? Any idea, any questions here? When the mutual funds are adding it, you also add HDFC to your account, but make sure look at the trend. Let us look at the trend of HDFC Bank. Now, what does it tell you? This trend, if I just show you this. Nikita, you want to give a try? What is it telling you? If you look at the chart is telling that the 2016, the price was around 600. Then the price went to 1200. And for last 2 years now, it is around 1650 levels, and bottom it made was around 1300 level. Yes, Navika, right? I'm saying Nikita.
Nikita, yeah.
Yeah, Nikita. Yes,
Upward
Nikita.
trend. Price is increasing, so it's upward trend, right?
Yes, you're right. So basically here you can see the weekly support is around 1300, which is a good accumulation point. Okay, now how do we read this kind of a chart? Market is driven by greed and fear. So here, someone who saw the value of the bank bought it at 900 level. That included me also, I believe. See here, I had accumulated that share around this level. 1101, 1101, 997. So someone who found the value of the bank, because the whole world was talking about market crashing. Okay, world coming to an end. So that time we thought, okay, anyway we are all going to die, but let us have some shares in our account and die. So basically we accumulated some shares there. Post that, the people who had actually bought it, most of them would have sold it here. So because they found a good 30% return, all of you wanted 30% return, you book profit, come out, no harm. But at that time, someone still found some value, took up the share price to 1700. But that time, those who could not sell here, or those who bought here, they started selling. The price went back to 1300. Now a person like me who had actually bought HDFC here and sold here, who missed this rally, who knows the value of the company around 1300 is a good, will go and join here, and we are taking the price back to 1700 levels. Now at 1700 levels, if the price goes and gets rejected, it will come down. Simple as that. It doesn't mean that it should directly go up, because the previous resistance will still act as a resistance. Someone who has bought the share here, they all need to complete their selling. And if there is a big buyer, when I said big buyer, the pension funds, that is your LIC, insurance companies, mutual funds, foreign banks, when they have accumulated all the shares here, the supply will get dried out and the price can go up to a higher level. So how do we convert it into a trade? If you have accumulated at 1300, 400 level, you should be looking to sell call option at 1650 levels. Because if the market goes up, no problem, you have the shares with you, you have collected the call option premium, you made money. Market comes down here to the lower level, then you can add more of this company and then continue the journey with it. Assuming you miss out the opportunity, let's remove all the drawing here. So here there is a second opportunity for someone, that is the price came to 1300 level, went to 1600 level, again it came down to 1540 level, and then there is a breakout here. Should you buy there? Should you buy? Assuming on 13th March 2023, you see HDFC Bank at 1770, mutual funds are accumulating that stock, the profitability of the bank is pretty good, and what will you do? Will you buy or will you wait? That will determine what you are going to make in the market. Yes, Nikita, will you buy there or will you say no, I will wait for it to come to 1500?
I think I will wait for, because mutual fund are accumulating the trades now. So
No, you should buy it there. 99% of the people will not buy because they say I will wait. But if you are using the trend following techniques, and if you see there is a flag breakout, usually the length of the pole will be the target of the price. Like for example, from 100 the share price went to 140, and then for 3 months the price was dancing at 140, 128, 138, 127, and finally it broke the 140 level. This we call it as a flag breakout. So usually the length of the pole, that is the share price from 120 went up to 140, that is 120 points will be the target. That means you can expect the share price to go up to 260. So here if I take the length of the flag, see here, I go ahead, look at the history. Look at this. This we call it as a flag breakout.
I think the same like this happened to me. So I invested in the stock shares of JSWC. And I got it around 560. Now it's skyrocketed to 780.
Yes. So usually if there is a proper flag breakout, this length of the pole, this is not exactly a flag breakout because there's a multiple divergence there. But if you see a proper flag breakout, you get that killer returns. Okay, so here HDFC Bank, trust me, if it breaks this level 1716, it has a potential to go up to 2400. Historically, it has happened here. See here. It moves, it exactly does it. From 2017 to 2018, it kept on going up. Then there was a kind of a flag, and then say you got a potential upside here. So these kind of opportunities you need to explore there. Okay, so what we do here, you need to have patience. Whatever people will do in Twitter, whatever they talk about it. See, now I know so much about market, but do you think do I put all my money into stock market? No. 40-45% of my money I put it into government bonds. Why? Because if the stock market crashes, okay, if the stock market crashes, I will have a backup. Backup in a sense, I will have some money to buy quality stocks at that time. So we keep buying government bonds via Zerodha itself. It's not just we put the money into equity. So you need to have patience and capital deployment. When I say capital deployment, you buy government bonds. You can get 7-8% returns there, and you can sell it and put that money back into stocks if the market falls. There is an interest rate risk that's part of the game, so we'll discuss about that also in the later part.
Sir, I have a question.
Mhm.
Like, portfolio management, if you invest maximum of 50%, there
Mhm.
they're getting a equity market is also equally good. Okay, so the diversified stocks will be like bonds. When you put, maybe the guarantee will be, but it will be a loss. No, sir, 8% is not a good returns. I see most of the, the whoever is the rich people, especially like Big B. I mean, that's Amitabh Bachchan's and that kind of category people. They are just putting in stock, especially on the bonds. What you said suggested that capital deployment, but
Mhm.
still, I see something is still it is running in my mind. Why someone, when there is a kind of options, when the fund managers are there, they can do a 30%. So this is what it is. I
Okay, 1 second. India's top. I had one source there. Okay, let me check that. But PMS gives them 100% returns. Then the 40 lakh will become 80 lakh. So that is how they diversify, the big players in portfolio management services. But as a retail investor, the best part for you is, let's say you have an exposure of 65% in equity, that too not at one time. 35% you put it into gilt. This is the best asset allocation that you can do. Because today the Nifty is at what level? 18,300 level. Let's say you have deployed 6.5 lakhs there. And so for some bad reasons, the market comes to 12,300. Now you can invest 3.5 lakhs at that time. Because right now, if you want to invest in Nifty, you have to invest 183 rupees per unit. And 6,50,000 is the capital that you have. So 6,50,000 divided by 183, like you can buy Nifty shares. Okay, I'll show you that in the end of the session. Today's end of the session, I'll show you how to buy Nifty shares. So you got 3,551. Now assume that the market goes to 12,500. Nifty ka share value will come to 123. You have 3,50,000 available with you, and 3,50,000 divided by 123, that would be a 2,845 quantity you will get. This is the quantity which you got. Now let's say after 3 years, if the Indian stock market touches 24,000, the Nifty ka value will be 240 per share, and the total quantity that you have is 6,397. So 240 into 6,397, your total investment will be worth of 15 lakh 35,000. That means you made around 50% returns in 3 years. Plus in 1 year, this 3.5 lakhs, that would have given you 35,000 as an interest. That also you need to add. Let's say 30,000 you would have earned as an interest. This plus this, so you made a gain of 5,65,000 on an investment of 10 lakh, that too comfortably. So that's why we say you have to put money into guilt. Like, for example, if you win a lottery ticket today, okay, and you get 10 lakh, don't go and put 10 lakh into Nifty. Just put 6,50,000 into Nifty, because India goes to a war with China. Then the share price may come down to 123. Everyone will start telling sell, sell, sell. Are you mad? You are because that time you will be down by how much percentage? Your portfolio will be down by almost around 32%. So you will tell, my God, I invested 10 lakh, now it has become 7 lakhs, and you will be panicking. To prevent such kind of a panic attack, you should keep some money in the guilt fund, that when the market is crashing, you go and add it. Like, for example, when the Ukraine war happened, war is not good, I don't support war. All technical analysts were telling, Ayappa, market will crash, market will come to 8,000, crude will touch 200, 300. I said, fine, let it come. I'm waiting. Why? I had some cash. I went and bought Nifty at 179 rupees. And today Nifty ka value is 200. I made around 36,000. Investment was around how much? Around 3 lakh rupees. So 3 lakh ke upar, if I get 36,000, it's almost around how much? Almost around 12-13% return. So I got here. Plus there is a dividend that you get on this. Nagendra, are you able to follow me? Sorry, Narendra, not Nagendra. Narendra, yes, Narendra. Does it make sense?
Yeah. Got it. So you get income in all the ways possible.
Yes, exactly. So it's all about building a capital over a period of time, like what you do with your regular job or your other business, whatever capital you're getting, 35% you put it into government bonds. Okay, 35% you put it into government bonds, 65% you put it into equity. Again, equity is not like what Shanti ma'am said, that someone called me and told, yes, bank, I will go and buy. When I don't know how many of you have kids here. Narendra, I think you're not married, right?
No, not.
So their mind becomes broader there. So we do so much of research when we send our kids to school. So when you're putting your hard-earned money, why don't you ask the company what business they are into, what is their annual sales, how many days do they take time to pay to their suppliers, within how many days do they get cash from their customers. All this information you need to check. Earlier for that, we used to go to, we used to pay subscription and buy it. But now we are in a world where all the data is freely available. Go to a website called StockEdge. Now then look into what the company does. So here you have, let's say, Bector Food Specialities. Now, do you know what they do? This company, Bector Food Specialities, any idea? Mrs. Bector Food Specialities. If you don't know, no problem. You can do one thing. You can open an account with Interactive Brokers. Okay. It's the, okay. Right. Mrs. Bector Food Investor. Give you this. Okay. Otherwise, I would have suggested you Zerodha or TradeGenie. Food, Mrs. Bector Food Investor Presentation. Okay, can you all make a note of it? Whichever company you like, go for reading the investor presentation. So if you go to this company, they will have this investor presentation. So investor presentation release. Investor presentation, yeah. Okay, type this. So it is like you're checking the school. Do they have swimming pool? Do they have basketball court? Do they have a science lab? So this company does all these biscuits, bread, and all that. Now English Oven is aggressively sold in Swiggy. I think Sridhar would be knowing about it. Like if he's looking more into product side of it, he will be looking into that. Now look at this. Revenue means sales. They were doing 228 crore ka sales. Here 246 crore sales. Now 347 crore ka sales. Increase in the sales is good or bad?
Good.
Good. So any company, whichever broker or someone is giving a tip, go check whether the sales is increasing or not. If the sales is not increasing and he's giving you that tip, you block that person's number. I can guarantee you your money will be protected. Okay. Second thing, what you need to look at is after they do the sales, how much is the profit what they're getting. This we call gross profit before they pay taxes or before they pay just taxes or depreciation or other cost. They are making a 44 crore ka profit. That means 340 crore, 47 crore ka sales if they do, they're getting 44 crore ka profit. Who? This company. Remember, this 44 crore ka profit is in how many period? It is in a period of 3 months, not for the full year. So in that particular 3 months, they made 44 crore ka profit. Out of this 44 crore, they paid the taxes and all to government and they have got 22 crore ka profit. That means this company in a year makes around 88 crore ka rough profit. Now on the every biscuit they sell, let's say if they're selling a 10 rupees ka biscuit pack, they're getting 60 paisa as a profit. So this margin should increase. So here you can see it was 7, then it went to 4. Now it is improving. If this margin continuously improves, it is comparatively good. Okay, all this I will teach you in the fundamental analysis session. I think it's scheduled in Feb if I'm not wrong. Then you need to look into all this data, like how frequently are they paying it to their customers, to their vendors, and what is the time period for them to collect the money back. All that information you need to check. So these are some of the branded products they have. Management is clean, not that issue is there, and they have their operations in multiple states. Sometimes what happens if the operation is based in one state, it becomes very risky. If there is an earthquake, flood, or a change in the government there, then the risk will be very high. Now their production is completely diversified. That advantage this company has got. See, they have got around 550k retail outlets ke saath tie up. 9,000 distributors are there. So I'll take you through this company ka complete fundamental analysis, how to do it using investor presentation. So it's like checking a school before you put your child there. So if you're putting your 40,000, 42,000 hard-earned money into Mr. Mrs. Bector Food, you should be confident about their business model. That is the whole idea there. Now what you can do if you don't have a time to do Google search and all that, you can come here to this application, what I call as Interactive Brokers. Type the name of the company. Okay. Urban Better. So here it gives me all the input. Now this company is a food processing company engaged in supplying food products, jams, ketchup, and all that. Now this company is paying 1 rupee 25 paisa as a dividend. And then there is a target for this company 471. Actually, if you had met me this 3 weeks back or 4 weeks back, then you could have bought this share at a lower price. Currently, the price is 435. Okay, it was trading at the 380 levels. Now here, if you click on financials, you get all the information: net income, taxes, and all that. And here you need to see one more thing, that is this is quarterly ratios. Where is the ratios here? Yeah, key ratios. Now key ratios में price to cash flow, per share, book value, EPS, earning per share, net profit margin. See here, companies like Britannia, when they sell a biscuit pack, they get 2 rupees for every 100 rupees sales, whereas Bector Food is getting around 5 rupees. That is the advantage of Bector Food when compared to Britannia. Then operating profit margin, see here, before they pay taxes, they're getting around 8 rupees ko operating profit margin. Now, if this operating profit margin keeps increasing over a period of time, it is very good. Now, net income, revenue, interest coverage ratio, total debt. Now, debt to equity ratio should be very less. Like if the owner has put 100 rupees, the debt should be 0, or here it is only 24 rupees. So the debt of this company is comparatively less. Then where is that? Leverage ratio. Okay, 1 second. Okay, we'll have a hand-on experience. I'll give you some companies. You will have to dig out the ratios and come back and explain it in one of the session. Okay, so if you do that, it's good for you. You don't do it, I'll not even ask you any question. My job is to tell you, because all of you are matured crowd. Okay, so you have to do that. It's your hard-earned money that you are going to invest. Now look at this, days of inventory. This is a concern here. Earlier, within 16 days, they were actually selling their product. Now they are taking 25 days to sell the product. Now this number goes to 30, 35, 40. That means something is wrong with the company. That is a first indicator to sell the stock. But at the same time, the good thing about this company, earlier they were collecting the money after the sales, after 33 days. Now they are collecting within 27 days. That means the cash flow has improved, but at the same time, we need to see why the days of inventory is increasing. Is it due to competition or is it due to management issues? That you need to check. Now that you can read the financial statements and basically get a fair idea, or when the company will conduct a con call, you can ask the company. Like the company, whenever they conduct a con call, they will give a toll-free number. You can, or these days they do through WebEx. You can log in and ask them why the inventory number turnover days are increasing. If they give a good reason, then fine. Otherwise, you exit. So that's why I told you, you need to work as a group here. Like pick up 2 or 3 good companies, do a proper study, put the money into that, and sell, make a big quantity, sell call option against it, and generate income out of it. Now I have done a lot of work for you. You can just pick up Hindustan Unilever if the price comes to 1300 levels. You don't have to do any of these research because I have already done it. Only problem is you guys came a bit late. I've been telling this talk for I think last 7-8 months. about this company. So Hindustan Unilever 2300 was a good buy. If it comes down, pick it up because there is a strong chances it may come down also when we look at the chart. See here, Hindustan Unilever, it may go back to 2800 level. There may be a slight rejection and it may come down to 2500 level. Look at accumulating at that level, or it may even come down in couple of days to 2005. So what you do, you buy a small quantity here, buy a big quantity here, buy a major quantity here. That way your price will be close to 2300 level. Okay, Ayappa, 2300 may we buy, then what if the price goes down? Then we have to answer is that's part and parcel of the game, because it's not just Ayappa who is telling it will go to 2800. Look at the analyst who are following this stock, Hindustan Unilever. They are telling it will go to 2848. Some of them have given a high target of 3200. Okay, only 3 analysts are telling it will come down from the current level, but 28 analysts in the world are telling it will go up.
Sir, how accurate is this targets when they're giving? Because each time in money control and all, it is just showing, okay, there is a polling always. When compared to this this website, what you're just showing, right? How we can just trust?
So basically, it's after you do the analysis, Hindustan Unilever ka first you have to go and see what products they are producing, what is their annual sales growth rate, then basically what is the inventory turnover data, then you need to see what mutual funds are doing. When money control tells you, do you go and do all that research?
No. We are just
that is the difference between money control telling you and you doing it. See here, money control will not tell you who is buying when. See here, if you look at the institution trades here, Vanguard, BlackRock, ICICI Prudential, Mirae Assets, all of them bought this share in the month of November. And you did your research. So what's wrong in joining them? See, risk is always there. Government of India says we will put higher GST on jams, or they come with some crazy rules, then the share price can go down. That's part and parcel of the game. But how do you time it? That is important. Like, I'm not telling you that look into Economic Times or a moneycontrol.com, whatever the recommendations they do, they buy it. Then you don't have to attend this 40-hour session. You don't have to do homework. You can blindly buy that. But one problem is that if they give 10 good stocks, 4 of them will backfire, 6 of them will work. You take up any stock recommendation, out of 10, 6 will backfire, 6 will backfire, 4 will work. Now, how do you manage that 6? That is the art. So what I can do, I can put 10% stop loss for every stock and hold on the winners. So if the winners, if they give me 40% return, okay, this we call it as risk management. 4 stocks, I got 40% returns. Okay, that means 4 stocks mein I did 160% ka returns I did. The 6 stocks, I lost 10% as a stop loss. Like I buy a share with 60,000 rupees. If the share price goes down below 54,000, I sell it. Like 44,000, if it comes down, I sell it. So that is like 10% stop loss. So I lose here 60% of my capital, and here I make 160% returns. Okay, so basically I have 100% kind of a returns here. But the problem with this strategy is you have to monitor all the 10 stocks, deploy the money there. And what if the 4 stocks don't give you 40% return? If they just give you 20%, 20, let's say if they give you 15% returns, then you will be in a loss. So to prevent such kind of a thing, try to find the 4 potential stocks and put your money and manage it instead of putting stop losses and playing around with it. Make sense?
Yes, sir. Yeah, thanks.
For example, there is a company called About India. Any idea at what rate I bought this share? Current rate of the stock is About India 20,567. Any idea what rate I bought the share? First share. The
Maybe
first
10.
is no, I bought it at 19,000. Okay, like how I played this stock, I'll tell you. I bought the stock at 19,000. Then the share price went to 16,500. Then it went to 18,500. Then again it came to 17,000. And then it went to 20,500. So how do you play the stock? No, you tell me. With all the 1 hour, 20 minutes discussion, how do we play this
You did
stock?
pyramiding technique over here, buying stocks when it goes down, then again up.
You buy 1 stock here, buy 3 stock here, again buy 1 stock here, buy 2 stocks here, and then you will still be in a good profit when the price is 2,500. Now, what gives me confidence to buy the stock at whatever price? The business model. You go to any hospital, pediatrician, and the vaccine what they give to the kid, majority like from the childbirth till 9 years, they give various types of vaccination. Okay, like there'll be a timetable kind of a thing, you have to follow that. And each vaccination now comes in 2 versions, painful and painless. Painful vaccination will be 1,200, painless will be 3,000. Which one do you think the parents will opt? Painful or painless? The same medicine comes in the 2 variation, one with the pain and another one without pain, painless. Majority of the parents will go for painless, like that vaccine. So they sell it for 3K, 3.5K. So as a result, if you look at the financials of this company, as and when India ka population keeps increasing, it keeps growing. See here, look at the previous trend. 43K, sorry, 33K, 36K, 40K, 43K. These are all in millions, okay? Like millions INR. So the sales of the company is increasing as the population of the country keeps increasing. When the sales increases, the profit of the company increases. When the profit increases, the share price will also increase. So many of them will not even touch this stock. They'll tell 19,000, I can buy 1,000 Yes Bank share for 19 rupees. Why should I buy this? I say good, buy that. But if it becomes 0, then you'll have to take a vaccine yourself for getting that pain. So that's how you filter out the company. This Interactive Broker gives you this fundamental scanner. So there you can keep doing research on various companies and industries and pick up a stock there. Okay. I'll do one thing. I'll explain the trading wala part and then we'll go for a break. What do you suggest? You want to go for a break now or do we discuss about the trading part? Yes, friends, tell me.
I'm okay with anything.
Acha, tell me one thing. Are you guys okay stretching